we're coming to that time of the year when we expect a cost of living adjustment to be announced. What are you expecting, and how does that cost of living adjustment affect retirees?
Yeah, so it's really interesting. So the next CPI report comes out in October, and then shortly thereafter, Social Security will announce what the cost of living adjustment will be. It will likely be low. I'm guessing maybe around maybe 3% or so, give or take. And the idea behind the cost of living adjustment is that whatever your Social Security benefit was the previous year, it will be adjusted upwards by that 3%. And folks will say that 3% isn't enough to offset the cost of living. I'll still be behind the eight ball, even though there's a 3% cost of living adjustment. And I would say, by and large, that might be true because you're spending maybe more on food and groceries than you did in previous years. The other thing is, for many, many years, Social Security beneficiaries have benefited from the zero interest rate policy world, in which, yes, COLA adjustments were low, but CPI was low as well. And so when you think about what's the effect of inflation on older adults for all these years, with the exception of maybe COVID and a couple, 2 years ago, it's been relatively low. So even though the adjustments have been low, the inflation rate has been low. And so hopefully that hasn't hurt older adults as much. There's a CPI index that looks at the cost of living for older people, those in their 60s and 65 and older, and that shows that it's roughly equal to CPI. So it to me it's one of those double-edged swords. I always think of it this way. On the one hand, when you have high inflation, you have high interest rates typically, and that benefits the people who are investing in CDs and money market funds. On the other hand, when inflation is high, it also hurts people because their income may not be rising as fast as their expenses. Double-edged sword.
So, are there any other things retirees should be doing now to get ahead of the changes in inflation and also that cost of living adjustment that you talked about?
Yeah, I mean, I think the big things that obviously, if you don't have an investment policy statement in place, you should put one in place, and that's something that evaluates what are your goals, what's your time horizon, what's your risk tolerance, and that gives you the blueprint to act no matter what's going on in the market. And so, if you don't have an investment policy statement, create one. It's easy enough to do online. If you can't find one online, maybe seek the help of an advisor. So, step one, get an investment policy statement in place. And then the next thing I would urge people to do is to think about, especially if they're retired, have they figured out ways to manage and mitigate all the risks that they might face in retirement? We talked about inflation, and that's sort of very insidious risk, right? It's the notion that your purchasing power will decline over time. And if you're, it's age 65 and just beginning your 30 years of retirement, it might be that the dollar that you earn today might only be able to pay for 50 cents worth of eggs in the future. And so you need to manage that risk largely by making sure that you continue to invest in equities. On the other hand, the other big risk that you'll face in retirement is something called longevity, or the risk of outliving your assets. And there's no guarantee that you can use investing in equities, to make sure that you don't outlive your assets. And the one thing you may want to consider is a different tool or investment to manage that risk of longevity. For some people, that might mean if they have a pension or Social Security, that may be enough. For other people, it might mean investing in a income annuity or a deferred income annuity, which is in essence an insurance product that will pay you money for the remainder of your life, so that you will never run out of money. And I think those are the big things that investors and retirees need to think about: is what tools do I use to manage and mitigate the risk that I'll face in retirement? Those are big things that people need to think about and not put their head in the sand about.